Okay, I am based in Gurgaon. I have worked with companies like Maruti Udyog. I was when it was a startup with less than 100 employees, or with Larsen and Tubro as a country head with General Motors. I got into valuation through some friends of mine in 2018, the first batches. And I have been lucky to have done valuations of variety of companies, including serious audits by SEBI and by Ministry of Heavy Industries. Of course, a lot of banks, they keep on, trying to grill us. And by grace of God, we have not been asked to change a report or to even, do a rethink. Basically means that whatever we have tried to do, we have tried to do the best. And luckily, we have been able to stand by our ground. Yes, it has given us a lot of other type of things. Like in one case, we were valuing rice mill in Karnal. That whole thing is that rice mill had already come under LCLT. So the first set of owners, they exited, and their younger brothers, they came in as the second set of owners with a large discount. And the interesting thing was when I asked them for the FAR, they gave me an FAR which was of 90 crores, whereas on the company law board, the FAR was 65 crores. So, when I asked them, I said, on the company law board, you have filed an FAR of 65 crores and fixed asset cross block. How can you tell me you're 90 crores? No, 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 we have given a wrong information. I said, please don't say like this. Because if I say you have given a wrong information, your everything goes finish. So we have had, and they offered us bribes and whatnot things. So we have had those experiences. We have dealt with Japanese, we have dealt with Indians, of course, we have dealt with Germans, we have dealt with Koreans. And so these are the experiences that I'm going to share today is what problems we have faced with the valuation of internationally owned companies operating in India. So the equity is held internationally. These companies are operating in India, and the structure of the whole company and everything is not very easy. In some cases, there are also the big four involved. And we'll see as we go along that in one case, it was a company where a Japanese was involved, a German was involved, and a Singaporean, and we as Indians, and it was a pretty human relation issue was far bigger than the valuation issues. Okay, so any questions so far, or shall we start?
Yeah, in fact, good morning. I'm Dr. Sethi. So the way, I mean, you have narrated that you will be conveying about the valuation of companies working in India, but subject was something like this, that valuation of foreign companies. So I thought that when we have to do valuation abroad, like I'm in Indian, if I go to say Dubai or other places, so what all factors to be kept in mind and how to do valuation there? That is more important, because anybody coming to India, we understand that there would be factors of their equity and their rules position, like banks also keep coming. I was CEO in Fiji, Housing Authority of Fiji. So, and like in India, when Chinese company come, we know that what is happening, political situation there, or Sri Lankan company. So that is one aspect, but anyhow, you will be covering it, but then I will request you to, keeping in view your experience, to cover those aspects also, that when we have to do valuation of companies, they are abroad. Say Indian company abroad in Africa, many companies going, or we have to go and do valuation of assets in Dubai. So there, I think these are the more practical and at valuation level, yeah, at valuer level, that becomes more interactive or something, because it will be more of, are you you will talking more about an SFA, or if you will talk only about the companies who are in India and we are doing valuation of those companies' assets. But my understanding was that it will be something that going abroad, Singaporean company, when we go to Singapore or American, if you're not touching America, but at least Dubai or so, procedure could be the same. So kindly cover that part also. That is, I think,
Okay. Now, see, I think there is some misunderstanding there. But however, we have also done valuation in US and in UK, and we can also cover that as well. That excuse me. And here we are only talking about physical assets. Valuation of company per se as a total business asset requires a lot of different things, and a different country will have a very different specific need. Let me share one example. It is a very interesting example. When Honda came into India in 1992-93, somewhere around that time, they created two joint ventures. One was with Kinetic Group, Kinetic Honda. Another was with the Hero as the Hero Honda. Now, the problem they started facing was in the second year when they got dividends. So dividends at that time was tax-free. And if they were to transfer dividend to Japan, there was 20% withholding tax, and then they were to be taxed in Japan. So altogether, they were unable to take a decision, or they said, okay, let's wait for a proper tax regime. And they kept the money here. And that went on for about 14 odd years when they realized now they have so much money in India that they don't need anybody in India to make their products. So the first thing they did was to divest from Kinetic, which was easy. And the second was to divest from Hero, which took a lot of, very serious issues inside between Hero Group and between the Munjal family and the Honda. And they were able to do an agreement of separation in 2007 in Bangkok. So, and of course, after that, they created the first plant in Manesar, which is the IMT plot number 1. And now they have multiple plants, one in Bangalore, one in Gujarat. So, that's how that is also one way of how international companies and things work in India. Another thing, when the company goes abroad and there is a different set of way by which we look at it. So I have not planned my plan for that, but let me see if we are able to finish off. We can definitely take some work on that. And in case not, then I will request Divyajyoti to have another session on how to value assets and companies of Indian equity in abroad. Dubai is a very easy work, but a lot of other companies which are into more difficult environments like Europe or in Africa. I have worked in Africa for 4 years, so I understand the situation that way. So, Dr. Sethi, I hope, though of course we are not meeting all your requirements, but let's proceed, I guess.
No, sir. I think I will request you, because I am also a PhD and I am also now MRICS. So kindly understand that, like if you are talking only about say Maruti, or like you are giving example of Honda that divided, kindly understand that our level, I'm new to valuation. So first of all, like suppose you have to tell us, so let's not talk about only about something happening share, and so that becomes superficial. You please we will get benefited. You start with this, that for this valuation, if our qualification, whatever we have, what is the qualification required or anything else is required for the benefit of everybody, then how to go about it. And then like foreign company coming, if we will only remain in between the words that that they were spending this much and they had earned this much, so we are not having any concern for that. We should be more talking about that, first of all, that what are the requirements in, if we are doing in India or going abroad. Suppose what I'm talking about, Dubai is easier. You give an example, if you are experienced, say Mr. Mohammed Ghani is there, some sheikh. He tells me, I go, like I've been to Dubai and even in Africa, Sierra Leone and Senegal. So next time when I go to Dubai, I say that I am an international valuer. So kindly tell us that what are the requirements of becoming international valuer?
Okay, Mr. Sethi, I think, Mr. Sethi, I
So
think,
then it becomes interactive and interesting.
no, Mr.
Otherwise,
Sethi, I think there is a very gross misunderstanding. This seminar is not organized to give you the information on how to become an international valuer, how to get registered in Dubai or in any other place. That is definitely not the intention of this
so,
seminar. So
at least with your
in case that is
explanation, I think
please,
then
please.
Mr. Sethi and Mr. Agarwal, sorry I'm interrupting between. May I suggest that let the session start after 45 minutes? It's 2 hours session. After 45 minutes, we will have good flavor of what Mr. Agarwal is covering. After that, if there are still certain gaps that can be taken up in the last 1 hour, that would be my suggestion. Let us proceed.
Okay, thank you. So let me start on this. So this whole thing is the issues that we have faced in our experience with valuing of assets of international company based out of India, where the manufacturing plant in India and majority of the equity is international. Now, when we say international, we mean not from India, and these can be from Canada or Europe or from Singapore. We have not come across any company so far where the ownership has come from Dubai. So here the international companies that we talk about are in manufacturing, which of course there are many. Foxconn is one, which is the largest manufacturing in mobile phones, and National Panasonic and Cobelco and so on. Finance companies are also here. OLX, so there is a several finance company. Nomura Finance is there, and Mizuho Bank, and they are also there. And of course, there are service companies. So service companies are not very public at this point of time. Now, the structure of the companies, they can be full subsidiaries, like what we see in Samsung or Hyundai, or there can be joint ventures, like Minda has several joint ventures of JVs in auto part or Maruti Udyog or so on. And third is joint venture and with public quoted share, for which there are Hindustan Unilever and Maruti and like this. So there are different type of structures, different type of the companies which are operating here at all in India. Now they become pretty complex. Now let us say there is a parent company in country A, they have a subsidiary in country B, and a manufacturing company in country C, and they have a manufacturing company in India. So now the reporting of financial and asset data is in all the countries. The depreciation as per the local company law may be treated as difference, will be different rather. Then in all of these cases, there is a very large chances of transfer pricing issues of the assets that may not affect the valuation, but it affects the valuation in some ways. Then also we need to have an understanding of the tax laws of India, because ultimately the company is operating in India under Indian tax laws, and then different strategies of the parent companies. So when we talk of different strategies of the parent companies, that was the example I was trying to give for Honda. It doesn't make a difference whether you call it Honda or you call it Minda. The logic of valuation will remain the same. Now the complexity is, another complexity where we have faced this, there is an Indian subsidiary. The original owner is in country A. They sold the company to the new owner in country B. And the decision of value was done without any discussion with Indian managers. And the effect of taxes in the seller country, currency effect, and all the others. Now, let me give an exact example of this. In Delhi, there is a very big attraction called Madame Tussauds Museum, this wax museum of Madame Tussauds. It was first in Connaught Place, and now it has gone into in Noida. So it was owned by Madame Tussauds of London, and they sold it to another company in Norway. Now, when this transaction took place, the whole of Madame Tussauds and their 32 countries presence was also sold as a lock, stock, and barrel deal. The valuation of Indian subsidiary was decided between the UK and the Norwegian party. And when the transfer took place, when everything was signed, then the Indian managers, they came to know about it. And after that, we came in as a third party independent valuer to value all the assets and the build and the land building and all the things on that basis. So this becomes a pretty complex because we have to value from our perspective, from the Indian perspective. We also have to value from an income perspective, what may be the income which may be coming out of those assets. And then we also have to understand that how the country B, the new owners, it is going to be affected. So we have to have discussions and so many things. So that is where the complexities they come in the international valuations. Now, the first case we want to do it was a Japanese brand product, very big Japanese brand. They said they want to do valuation for internal purposes. It was a manufacturing setup. The land, they asked us not to touch the finance, only the physical assets. Now, the land they had, it was a government leasehold for 33 years. And all the major assets were from international suppliers, which was about 95% of the total asset. Even a lot of furniture was from international suppliers. So this was something, it is a bit uncomfortable, but that's fine. That's their company. So the first observations that when we got was, first is the FAR was in excellent shape. And this was the best FAR we received. It was up to date. The date we got the FAR, it was updated up to 1 week back. So that was fantastic, and everything was in the buying currency, exchange rate of that date, and the duties and taxes paid. So we had all the data that we could have asked for, and it was up to date. That was also very interesting. The depreciation, which the income tax and the company law both have taken, were also there. So it was a pretty big Excel sheet, but we had it. Now, normally in these cases, when you get the FAR, my first suggestion is whenever you are dealing anything with such companies, these are not under IBC, you should offer a non-disclosure agreement to all these companies. Even if they don't ask for it, is always a good idea to write a small mail to them stating about the non-disclosure. The international companies operating in India, especially from the developed world, they are very sensitive. But I found that the Indian managers may not be the most sensitive. So my first of my suggestion is always send a mail to them. I hereby commit to as follows. So something on that status. Now, in the FAR, we also found that the capital work in progress status was also available. All assets more than 5,000 and above was listed in that. And each construction contract was listed because this whole factory was in approximately 30 acres of land. Every software was listed, even if it was on a subscription basis, which means where the payment is to be made every year. And the use of intellectual property was also listed, where they have taken the intellectual property from their parent company in Japan and some from Singapore. Now, when we went to do the plant inspection, it was a super excellent plant. Everything was stacked. Even the trolleys which were shifting material from one to another, they had a number there, number written, and for where, and everything was in the next maintenance date. So it was super excellent plant. I have worked in Japan for 8 years. I have not seen such excellent plant, even in Japan, which I saw here in India. And status of all asset was known. So even when it was under maintenance, not in use, it was all written there. You can see. So the inspection that way was very good. Very orderly operations. And normally when we go and see the physical assets, we always try to see the maintenance record because they tell us a lot of things, when we do that. And all the maintenance record was very proper. So overall, the company operations were extremely good. So they were not making profits. Now, when we went on to further, they did not allow many pictures to be taken as a physical assets. And in certain case, assets were also not shown to us due to secrecy of technology. And they very clearly said, sorry, we will not allow you to enter this particular area. We are saying it is there, but we will not show you. And there were a lot of assets. Another thing we found was there was a lot of assets which were purchased from the parent company and not directly from the manufacturer. So whenever assets are purchased through the parent company, especially those assets which are not special purpose, like a press or a die or something, you always feel a little uncomfortable. But that was there. And custom clearance documents were not available for inspection. And financial audit report was available for inspection. So even though the FAR was very good, when we wanted to check the custom clearance document, you please show us of last year or something, no, it is kept somewhere else and we can't show you and so on. So that was it. It is a private limited company. So financial audit reports was available. Now, one of the things observations was the dies and mold itself was of about 120 crores. And the plant is four-year-old. The die and mold production data was available, that how much a particular die or a particular mold it has produced. And about 40% of the die mold was shown as nil value, whereas they were being used for production. Now, this is something which raised a very serious eyebrow. That first is 120 crore of die mold is typically a very large size die mold. Even when I was working, I have worked in several car companies, even in car companies with large size dies and molds. Of course, it is more than 120, but this was not car. So it was, the first intuitive feeling is that this is high. The second thing which was extremely uncomfortable was when they had shown the present value on the books as nil, whereas we could see them being used for production. So when we took this matter with the Indian CFO. Now, what he told us was the company was following Japanese depreciation norms. So fine, you're following Japanese depreciation norms, but can you show us the norms? So they say, no, we cannot show you. However, we also told them in no matter what case, the value of any asset, if it is being used, cannot be nil. And if the asset is physically lying in the premises, you have to have a minimum scrap value. Number three. Another thing they said is that there is a board resolution for treating die mold life as 3 years. You see, even if you have the resolution and even if you show it to me, you still cannot make the value as zero. And as a value, I will not accept it as a zero value. I will not even accept it as a scrap value now that I have soon seen 2 of your molds being, running in production. So, we started having a difference of opinion there. And we told the CFO was that company was incorporated in India, is running in India and complying with all Indian laws, which he says, yes, that is correct. Number 2, the shareholding pattern does not change the local law due to a specific country. You can have a company from Germany or anywhere operating in India, but the Indian laws you cannot change. For example, it's a Japanese company. In Japan, they don't have called a provident fund, employee provident fund. So out here, can they use something called an employee provident fund? Number 2, what I also told them is in Japan, the minimum wages is about $1,600 per month. So why are they not paying $1,600 per month to the Indian workers here? and the minimum salary to a CFO there is something like $9,000. So I asked him, "Are you getting paid $9,000 per month?" And he was becoming more and more uncomfortable. The another point which we told them was that acceleration depreciation is used for income tax purpose, but not for valuation and as per company law. For which he agreed. He said, yes, that is true. And nil value means the asset is not in the factory premises. If it is, there has to be a minimum scrap value. And lastly, no board resolution can change the law of the land. So we had this matter became pretty serious. We were being shouted at, which is fine. We at least as a valuer, I'm used to it by now. But we said no. We were also threatened that we'll cancel your contract. So fine, you can do it. I was also threatened we'll report you to IBBI. So please do it. Because we were very clear that what we are asking is, we have not even given a valuation report. We were just trying to discuss the FAR. Now, another thing what CFO asked us not to mention that we have not seen some assets. Now, had nothing was being told to us, it was second matter. But when somebody tells me that you have not seen those assets, please don't put it in your report that you have not seen the assets. And we regret it, as we were not sure that assets are actually there, considering those were A-class high-value assets. Actually, those assets were for R&D purposes. And I do understand these are for what you call would be high-value assets. They could have still shown me the asset from far, but they refused not to do it. But anyway, that's fine. So all of this started creating a very big discomfort feeling, both in the mind of CFO and in our mind. He was getting uncomfortable that एक ईमानदार valuer kahan se aa gaya, and we were getting uncomfortable that we may be asked to give a report which does not justify me being the right valuer. Now, we asked for the justification for the purchase price. That was another thing we did, considering that the same general purpose machines of similar technology was available in India at a lower price. Now, here what we are talking about, example, is a 1,000-ton plastic injection molding machine. There are over 500 such machines running in India from at least 6 to 7 manufacturers. We know the prices. But the prices that we found there was approximately 1.5 to 2 times than the Indian price, or a 400-ton hydraulic power press. So when we started asking justification, that you please tell us that how have you purchased this at 2 times the price? What is so great about the machine? And I'm a mechanical engineer. I can go, I can inspect the machine. I did not find anything which is so special. So why should I take this price? I'll take on a replacement cost, which will be much lower. And for that, the answer was that these are come with molds, and so they are high cost. But when we found the detail, we also found the molds were capitalized separately. So you had a asset, which was the machines, and you had the molds, which was also separate. Now, the only way I could have checked whether they have come together or separate was through the custom clearance document, which again, they did not show us. Considering that everything was so good, even then they did not show us. Then we started coming into threats. So the Indian CFO clearly threatened us that he will complain about us for asking bribe and misbehavior. He also threatened to cancel the valuation from us. I know Japanese language personally, but that's a very personal thing. And we requested that we can have a meeting with a Japanese CFO. He also refused to do that. Then, so it was becoming pretty uncomfortable. And by this time, we were sure that the matter may become against us. So we used to keep the telephone there with the recording, though, of course, we did not tell him that we are recording the conversation, but we did it. So what we did was with our team and with our thing, what we decided was what to do. So you cancel the contract is not a problem. That's okay. But something has to be done. So we wrote a mail to their MD requesting that we may submit our draft report. And if that is not acceptable, assignment may be cancelled with no obligation. So, we did escalate it to the MD. And the MD, he's a Japanese MD, he agreed to do this. So the draft report, it had several, we made a very, very large draft report. It had several sections. So first thing we started off is what is valuation and what is international valuation standards. So this was the first thing, because what we wanted to tell the Japanese management that we as Indians doing valuation for an asset in India, we follow these valuation standards, and in these valuation standards, there are Japanese companies also which have signed up for these. Then the second section we did was the law in India related to depreciation, life of asset, and other matter. And all the relevant sections, we also did a copy paste from actual gadgets, giving reference to everything where we were quoting from the law. So you can imagine this whole first and second part, how big it became. Then we had section 3, why we need to follow the law of India as Indian valuers. We can follow the law of other country if made available, so long as it is compliant with IVS as well. IVS being International Valuation Standards. And after that, we did the valuation process, and we also gave the final value. So you can see that in this report, a lot of things which we do not follow, we had to do it, and we had to do it with very simple English, because the English of Japanese is quite weak even at the top level. So this whole report became pretty bulky. And the report was accepted in toto, even by the head office in Japan. Okay, so the learnings on this is, first is be clear on your fundamentals. The second is be ready to explain to the international clients with evidence. Use simple language. In India also, only 10% and 2% English is the first language. Draft report is a good way to resolve differences, if any, and be patient. So these were the learning which came out. We also realized that our Indians who were the CFO and all, they were trying to justify what we got from them, rather than to either to tell us, you give us a report and we'll have a look at it, or whatever it is. So there was some, we had that thing where with the Japanese, we did not have any problems. Okay, sir, any questions on this or anything else which you would like to ask on this, sir?
Sir, basically, now whatever you have conveyed, it is, sorry, because nobody else is asking, but I'm also trying to ask pertinent thing. It is basically PNM, plant and machinery. Because I've done PhD in plant and machinery, like a topic in total quality management. So I think these are the basic fundamentals of plant and machinery that when we do, so these things have to be kept in mind. So only difference like a foreign or like draft report, even in land and building, everywhere it is prepared. And it is with the bankers also, and to the main client, not to the party, we share. And so that honestly, sometimes they may ask for some additional, and it saves time. So plant and machinery and assets, I don't understand either. So what is the then, and any particular additional qualification you had, or only IBBI that registration or certification? At least kindly tell us that in case anything else was required, or you were able to do only with the IBBI.
Okay, now to be a valuer, you only require to have a IBPI certification with the relevant COP. The COP with can be from any of the RVOs you can have. You can also change an RVO from one RVO to another one. Okay, so
Sir, these things are generally, I think, all are registered valuer. We all know that.
no, so Mr. See,
Sir,
whatever questions you are asking, I'm trying to
No, no,
answer those questions.
I'm asking that did you have any other qualification? These things
Sir,
are known
I
to
am
us.
okay,
That
Mr.
COP
Dr. Sethi. I am
Sir,
a IIT Kanpur graduate. I have done my MBA from Thunderbird, Arizona. I am a 40-year experienced person.
so you
I am
please
a chartered engineer. You see, now these qualifications have already been told to you. Beyond that, as a
no.
valuer,
I'm
as
not
a
asking about
valuer,
like this. So I have many qualification. I am fellow. You are chartered engineer. Aim is not to discuss personal qualification. I am saying relevant with the assignment. And anything else was
no,
required.
nothing.
My question
No,
is simple.
nothing, sir, nothing.
Because
As a IBBI registered, as a
kindly
IBBI,
understand.
sir,
And
as a Mr.
sir, now
Dr.
you
Dr. Sethi, as a IBPI registered valuer in plant and machinery, I can do valuation of plant and machinery. However, jointly with other IBPI registered valuer, I can do a complete valuation of all the company assets, including financials.
Sir,
But for
can
that, I cannot do it. We need to have a relevant IBPI registered valuer.
Yeah, that is called entity. We understand that entity is
No, it
required.
is not necessary to be an entity. It
No,
can
no.
be a joint working.
You join working, okay, it's okay. So aim is not that. Kindly understand that my question is pertinent. I'm not asking for the sake of asking, because in land and building, I'm land and building valuer. So many other factors are required. For example, 34AB for some particular thing. Even for foreign assets, it is advocated that MREX is required. RICS. So if you have any,
Sir, are you aware what is 34AB?
well, tax, I am registered by you. Please,
Sir, please. 34AB is not a registration. It is a empanelment which the Commissioner of Income Tax issues.
so you please in
Sir, please. It is, sir. In the 34AB is possible in all type of assets, and 34AB is also.
Yes,
Sir,
please
proceed.
Sir, please proceed.
You see, Dr. Sethi, I am unable to understand what are you trying to reach at. I am trying to give you.
Because we are not able to understand. Because we are not able to
We
understand.
are also unable to understand. Sir, please continue your class.
Okay. Continue.
Please
Okay.
continue. Mr. Sethi, please
Agarwal
stop.
sir.
Haan ji, sir.
Agarwal sir.
Yes, sir.
Regarding this 34AB, just I have one question. This thing. This as IBBI registered valuer, this 34AB is mandatory to, for any valuation?
Okay, let me give you that answer. The first valuation report so-called from valuer, which we have been able to locate in India, not me, but the other valuer, was in 1906 for a land and building work. Now, when the valuation is started doing, then everybody became a valuer. Like today, the brokers, the property brokers are also valuer, car mechanics are also valuer. They give a value. They give a value by verbal manner, and their value is not accepted by bank or other relevant authorities. Now, in income tax, when there was wealth tax, and once there were transfer of properties, so what they realized was that the same, especially during wealth tax, the valuation of given by the individual or by chartered accountant alone is not sufficient, especially when it came to valuation of agricultural land, jewelries, and so on. So they started on what is called a section called 34A and 34B, where the commissioner, after looking into your experience and everything, can empanel you in income tax. Now, that was the first thing which started happening somewhere in 1970s. Before that, there was absolutely no government, what you call any registrations or anything for any valuer. IOV was started by Dr. Goyal. That was the first valuation organized institute, which today also has IOV and IOV RVS. Now, as of today, we have an IBBI valuers, we have a 34AB valuers, and we have third valuers which are not even registered with either of the two. So we have three set of valuers which are going in the country. Today, in 2018, when I became the valuer, when we used to see government tenders, they used to say, we want 34AB and paneled valuers. They did not know about what you call IBBI. The bankers, they refused to accept IBBI in the beginning. They only wanted a valuer. Valuer can be from any of the 3-4 registered institutes like IOV and PVAI and so on. Okay, the situation today. Today, wealth tax does not exist. There is a requirement by income tax sometimes, the member where the entity where I am part of, we do approximately 2 or 3 valuers as per 34AB for income tax. So that is not there. As IBBI registered, we are not automatically registered there. And if you want to register, you have to file it into your local income tax office. It takes about 2 years to get it, and many times the income tax people needs to be, you have to take care of them. But if you look into the tenders, there are still 8 to 10% tenders where 34AB is asked for. Regarding banks empanelment, every bank issues out a empanelment advertisement every 3 years, where people are, or the valuers are empaneled. There they ask for a minimum 3-year experience, and they do not have any qualification that you need to be 34AB or IBBI. Though in State Bank and in Punjab National Bank, especially high value valuations, they do not give to normal valuer, they give to IBBI valuers. Now, looking into all of this also, I should also mention that IBBI registered valuer have an unlimited liability as per the code of conduct. Whereas 34AB has no liability listed with them, and other valuer which are just members of institutes, they have 0 liabilities listed with them. So I hope I have given full.
I have seen that banks are giving more weightage to this 34AB than IBBI.
Very true. True. This is a very good observation.
Now, what you are talking about,
even if they mention that for surface, for valuation under Surface Act, there has to be a 34 AB registration.
Yeah, but
34 AB empanelment. This IBBI alone is not sufficient for that.
Okay, for Surface, yes, because Surface Act started much earlier to the 2013 when the new company law came into picture. But today, bulk of the cases are not going into Surface, they are all going into NCLT. And in LCLT, you have to have a 34 IBBI, 34AB is not recognized. See, anything related to IBC or company law, you have to have a IBBI registration, 34AB is not recognized there.
Okay, let's
Hello?
continue.
Yeah, is that okay?
Okay, sir.
Okay, any other questions on 34AB? See, the largest number of cases that we see today in land and building are bank cases which come in bulk. They'll call you or they'll give it to you at let's say 12 o'clock, and they want the report in 5 o'clock with 1,250 rupees or 1,000 or 1,500 rupees type of fees. But they are bulk, huge numbers. Then for SNF, there is a lot of work which happens for the valuations and bank reports and so on. But the plant and machinery are the minimum work which is available in the country today. Chile, sir, let's take the next case. Now, the second case where we handled this was a Korean company for setting up a plant in Noida. They were a mobile phone component maker for LG. They were absolutely new to India, and this valuation was for bank purpose. And the Korean CFO said he wants the report in 24 hours. So we met the Korean CFO. This guy was very, very, very smart and very good English. So communication was comparatively easy. But he said, no matter what, I want the report in 24 hours. So when we said, okay, we want these documents, it was very shocking that all the documents were given to us in 15 minutes on mail. And this was again for physical assets. They did not want anything on the SNS. So, and all the documents were in order and in excellent formats. The inspection was arranged at 6 a.m. So they said nothing doing. You come at 6 a.m. and we'll be there, as we want everything to be done in 24 hours. We said fine, we'll come. So we at 6 a.m. when we reached there, this was somewhere around 40 kilometers towards UP side from Ghaziabad. So I stay in Gurgaon. We left early, but that's fine. So what we found when we reached there, we had Korean engineers, we had interpreter, we have Indian account manager, and whosoever could have been required, they all were there at 6 a.m. It was, with a hot cup of tea. So we were greeted with a hot cup of tea. And I did a nasty inspection as a plant and machinery to even check the pump of ETP and the number of electrical panels and the height of the shed. And, because going into 6 a.m., we got irritated, of course. And it was very interesting that all was in order, which was very, very impressive. This was the first time in my 40 years where we find things are really done well. Then when we started on observations, we found that the variety of the assets was less, which means there was large number of similar machines. There was huge number of machines, something like 140 or something. But one particular type of machines were in large numbers. So, but the variety was pretty less. The plant had started trial production, but 50% of the machines was still in boxes, or they had just come and they were to be opened and installed and so on. And the values given in the FAR, we are asked for all verification. And when we asked for verification, we got all the custom clearance documents. We got all the tax calculation document for the customs. We got even the inspection documents of the custom where they inspected the machines. All assets were brand new. We had a, just at random, we said, okay, can you open this machine, or can you show us the what do you call for the construction, for the factory construction, can you show us this welding certificate, and everything we were shown. And all die molds were verified by Indian chartered engineer. So, and it was very well seen, very well verified. So the conclusion on this, we were able to give a report in 24 hours. The assets were all imported. The assets were 3 months old. They were all new, and there was direct invoice from the machine or equipment maker to the Indian address. And beyond that, then the report was pretty easy. So here, this is a case where they had actually tied up a loan with a bank, and bank wanted to before dispersing, they wanted a inspection report. Like for this whole thing doing in 24 hours and everything, we just got 6,000 rupees as a bank fees. But that's all. But the report was pretty easy. Now here, the important thing which I would like to mention is, one is custom clearance documents. Now, if we see the custom clearance documents, what our experience with the custom clearance document is, the custom people, they are pretty strict about the type of invoicing which is coming. And then they also do the tax calculation. And we have also seen cases where in case they think that the value value of the value which the importer has declared is very high, then they also take it under audit and scrutiny. So, the custom clearance document also gives us a very fair idea, and they are far more strict than we as valuers are. Custom clearance also, they undertake inspections, and the good thing is every document is available, and they give the document to the SSE or to the person who are importing. So this was pretty easy work. In case, especially in international company, we'll come to that in the next case. There are cases where people try to play a lot of mischief. So the custom clearance documents makes a lot of interesting, verification and so on. Any questions on this?
Yes, sir.
Yes, sir.
Sir, like generally I'm asking that 34AB, like you have already conveyed your views, whatever. So in a similar manner, there is something I just want to know, and whatever I'm talking, it is in the industry and everywhere, that there is something called RICS. So do you feel that Royal Institution of Chartered Surveyors UK, that after obtaining certification from RICS, if somebody does this valuation of international companies, so will there be any advantage? Or and because when we go out, they are encouraging that you should be having RICS certificate. So in a similar manner, even Japanese companies, or they can always say that in addition to IBBI, if your valuers have RICS, and big companies have RICS, like some valuers. So may I know your views on that RICS? And
Sir, I know 3 valuers. All the 3 valuers are 50 years age plus. All the 3 people are in the valuation work for over 20 years. And the reason I'm saying these 3, they surrendered their RICS. 2 of them land and building, and 1 was for plant and machinery.
yeah, this one, yeah, they surrendered their RICS is okay, but I'm saying that is there any requirement of RICS for any international valuation?
Sir, now when we talk of international valuation, if you are talking of a valuation out of India, let us say in Dubai or in Middle East or in Singapore or somewhere, then they will specify what do they need. Okay. Now, what will they need? The valuer, it should be an individual or a firm. The valuer should have so much experience. Valuer should have done so many assignments. Valuer should have done total asset size of so much. So a lot of this, a tender type document is prepared.
Okay.
So only after that, that assignment is given to the people who qualify on these technical matters.
Correct. So is there any requirement of RICS? That's what I'm asking.
Sir, you can definitely have RICS. Sir, you can have RICS, but whether the RICS will give you the work is not important, not guaranteed.
No, but sometimes there is a requirement, compliance requirement of RICS. Suppose
So
Japanese
please do
people,
it, sir. Sir, please do it. I'm not saying don't do it. You can do it. Nobody is stopping you.
Sir, I am also a RICS qualified valuer. So, sir, may I speak in Hindi, sir?
Yeah, please.
सर क्या है कि IBBI का जो रजिस्टर्ड वैल्यूअर है उसके आने से पहले RICS एक इम्पोर्टेंट ऑर्गेनाइजेशन थी जो वैल्यूएशन के फील्ड में रिकॉग्नाइज थी
जी।
लेकिन IBBI आने के बाद में क्योंकि रिटन एग्जाम है इसके लिए तो MRICS की इतनी आवश्यकता नहीं है। और सर मैं ये सेमिनार जो है मैं टेक्सास से अटेंड कर रहा हूँ सर यूएस से, और यहाँ के जो टेक्सास के जो लॉज हैं सर वैल्यूअर के लिए आई हैव गॉन थ्रू दैट, उसमें कहीं भी रिस्क का कहीं मैंडेटरी और कंपलसरी नहीं है उसके अंदर। उन्होंने जैसा आपने बताया सर उसी तरीके से उन्होंने बताया कि आपका इतने घंटे का आपका कम से कम सर्टिफाइड।
Sorry, can you talk in English? Please talk in English. You are not able to understand.
No, I'll translate. Let him continue. I will translate. Yeah.
तो
continue करिए sir.
sir, this RICS is not mandatory nor compulsory in US. I am in Texas. I am attending this seminar from Texas, and I have gone through the valuation for registration as valuer in Texas. There is no mandatory qualification of RICS. This
Okay.
RICS, before advent of IBBI examination, RICS was a major valuation organization. But after coming of IBBI, uh, RICS has less value. But
Okay.
as per IBA guidelines, Indian Banks Association, if you go through that, they have given some preference to RICS valuers. They
Okay.
say if you are ASA, American Appraisal Institute or RICS, then no experience is required because experience is inherited part of this RICS certification. You can get this preference only.
Okay. So in Texas, you have done something more valuation?
No,
some other-
I have come here, so I
Okay.
have just I have some query about this because I will stay here for a few months. So as a query, matlab, I just contacted some valuer. So he said ki RICS, because I am also a RICS certified member. So they say ki MRICS is not mandatory or compulsory, and they don't give any preference to MRICS people.
So are they recognizing IBBI?
No.
America.
They are not recognizing IBBI. They have their own rules.
Acha.
No IBBI, because IBBI is Indian.
Yeah.
It is not an international certification.
Correct. Board of India. That is Board of India.
Yeah, insolvent. But they know ki in India they recognize Indian valuers because as of now we are doing our valuation as per IVS, International Valuation Standards, and same standards are followed in US also. I have seen those.
Very good. Thank you. That's good.
Welcome.
Okay, let me now translate. Before IBBI came into picture, RICS was the predominant largest recognized body. So a lot of valuers were registered there. Plus, the bankers used to say that in case you are registered with RICS, you don't require any pre-experience, because to become RICS member, you need to have 6-year experience and so many other things. RICS is a body from England. It is also not a British government body. It is more like an association which has come up. So, and they have now in a lot of places, they also have a red book of valuation, which is pretty good. Another thing on US, there are actually 3 bodies which recognize one to be a valuer. And after that also there are some exams on which you can clear. But today, no country, in between any 2 countries, there is no accord of one valuer being accepted by other country as it is. Now, even companies like CBRE or Knight and Frank, who have large valuation practice in real estate, they have valuers which have qualified valuers from Australia or from different places, but they are not IBBI registered valuers. They don't do any IBC cases or company law cases. They all do private builders and such cases. So that is where the whole industry today is about. And in CBRE, whichever 3, 4, 5 senior people I know, none of them are 34 AB registered also, but they still have a good practice, very good practice rather. Anything else, sir? Dr. Sethi, does that answer all your queries?
Yes, sir. Thank you, sir. Kindly proceed.
Okay, there was a third case. It was very interesting. The parent company, it was again in Japan. They had a subsidiary in Singapore. And from the subsidiary, they opened a subsidiary B in Singapore. And the parent company opened a subsidiary A in India. And this subsidiary A was a supplier to subsidiary B. So this was the structure, and subsidiary was doing external market sale. So subsidiary A was an independent company which had a different shareholders. Subsidiary B was also an Indian company which had a different shareholders, because Singapore subsidiary A was from the parent. Obviously, it all, as a pyramid, it all boiled down to the parent company, but that is what it is. Very big brand name, and they used to sell this in the external market. So now more information was subsidiary A was also a supplier to B. So if you see here what I have written, subsidiary A was a supplier to subsidiary B. And A was not allowed to sell to anybody else. The type of products they were making, they could have supplied to a lot of other people in India, but they were not allowed to sell to anybody except to Indian subsidiary B. And these were something like 50 meters apart, in near Chennai. A was in major losses. So the Indian subsidiary A, it came into really major losses. Whereas B was selling in India and exporting, and it was making good profits. So you again see here, the Indian subsidiary A came into major losses. However, the Indian subsidiary B, they were making good profits because they were exporting and selling into retail market. And subsidiary A was the only supplier to subsidiary B. Of course, the first doubt comes in is they are compressing the price between A and B. There is something going wrong. We don't know. Now, the parent company wanted to sell A to B. Now here, because A was in losses and B had big profits, so instead of paying taxes on that big profits, so the parent company decided that why don't we sell subsidiary A to subsidiary B, let there be an acquisition of A by B, so that the profit which are there, they can be offsetted with the losses, and it becomes one company. And this is possible as both are independent companies. And then, of course, the valuation was required for the same. And you had Ernst & Young as the main advisor. So we got this assignment from Ernst & Young of this whole structure. Now, for the company A, here, the turnkey contract was given to a construction company of the parent company. So because the parent company was in Japan, they gave a total EPC contract to another company in Japan who had to do everything for the company A, even to buy chairs and a water cooler, and everything was to be there. And 97% of the asset, including construction on a turnkey basis, was done by that EPC contractor. EPC means engineering, procurement, and construct. So it was like a turnkey contract. And both are Japanese company. And very interesting, this contract was signed in Japan. So when we saw the documents, again, all documents are perfect, all audit report, all compliances were in place, and all assets were available, and all were in very good shape. Now, issues. Now, here the problem started coming in when we realized that the construction cost charged was 4x to the Indian cost. For example, the prefab shed they had put on at 3,200 rupees per square feet against present cost of 800 rupees. So this was something which was very strange. And the floor, which is standard 6-inch floor, which was charges 2,000 rupees per square feet against a cost of approximately 80 to 90 or 100 rupees per square feet. So these are things which were, which immediately came out. And P&M was purchased only through head office, and all billing was of head office. So what they did was, all the PNM which was purchased, it was the EPC country's head office. They purchased it from wherever it is, and then they billed it to the local company here. And all billing was of head office. And all the prices were approximately 50% higher than the open market price. And the custom duties were also paid on the higher prices. So it was very obvious that this whole factory has been set up at approximately approximately double the price which an Indian company would have set up. And again, the depreciation they took as per Indian law. The gentleman who was the CFO, one person by the name of Mr. Sundar, he was a brilliant chartered accountant and a company law person. And when we asked to him in Hindi that, have you seen this? And he said, there are many things I can't say because I'm taking a salary from here and they pay me good. So at least he was, pretty frank enough in that. Decision makers were all international Japanese and they had very, very little English language. Now, in Ernst & Young also had two experts, one from the parent company, another from India, and both of them were not very friendly with each other. So now you can see where we came into picture as a valuer. How do you value these? And with Ernst & Young, you can't take a fight because you get assignment from them also. They can't do all the work. So, now how do you handle these type of things? Now, more information, losses of A cannot be offset by profits of B. Profit of B is 35% corporate tax, 20% withholding tax on sending home, corporate tax at home country. Merger was a logical decision so that Indian companies can offset the losses. Higher fixed asset means higher depreciation. Now, this is something which became very obvious to us. The another thing where we could not ask, but we started feeling an inkling that why company A came directly from Japan and company B came from Singapore. Maybe there is a money siphoned off which happened, which the company siphoned off not as an individual, because these are very, very huge companies, 300-year-old companies. But the parent company in Japan thought that let me put it up, and in case there is a loss, I'll wipe out the loss in my books in Japan. In case there is a profit, then we can use here. And this particular thing where all the fixed assets which are put in there, they are highly inflated costs, we have seen in nearly all the international companies. So as a money transfer was from one pocket to another, a higher valuation was preferred. So here now the matter became, number one, how do you justify or how do you handle large, very high in books, income tax, custom duties, all paper in order, but still the value is very high. And second is, it's a very clear thing that this is being done to offset the losses. So what we did again, as per local norms, we did not change much. So what we also did was, then we said that, well, because it is come here and they had Japanese people coming, so we said there is a technology transfer which has taken place, which we added sub cost. And then also we estimated a fairly longer life of the asset because the upkeep of the equipment was very high, very well. And the buildings that was made was super excellent, very, very well made buildings. So, so we took in that manner, and because this was between two companies on the same parent, so we were a little comfortable in the sense that this is only for filing in the company law, and that filing also has to be done by Ernst & Young. The biggest issue we faced on this was handling Ernst & Young. The Japanese Ernst & Young had a different track of thinking, and the Indian Ernst & Young had a different track of thinking. That was one big issue. The second big issue we faced was that Ernst and Young, they, instead of going into the Indian accounting standard or something, they kept on telling, do this, do this. And in most of the time, we had to tell them, well, first let us decide what do you want to do, and then we do it. And in case you want to change something, change the goodwill value or some other, how can you change the physical assets? The bigger issues again is explaining the logic procedure of valuation to the owner companies and Ernst & Young representatives. So this was the biggest issues we faced. The valuation whole work was completed in about 5 to 6 days, including travel. But the discussion and all went on for 2 months. And there were frequent Zoom calls to review some asset, advice to some, we were also asked, why don't you sell some assets in the market and so on, usages. There were even calls where we had to tell them that they said, no, you have written, there are 17 items of this, and here it is written one set. I said, yes, please see, we have written one set comprising of 17 units. And then we had to show them, we were showing it to Ernst Young. Here is a document where this is, and this is a physical places where it is. You see the pictures, it is there. So we had to go through a lot of those explanations and so on also. And what we realized here is that it is the understanding issues which became much more important than the actual valuation per se. So this is where it is. Well, we did get a good fees on it, so it is all worth all that effort. But these are the things. Now there is one slide which I got missed out. So let me try to do something more before we take up this.
ऑर्डर कोई असर नहीं करेगा मेरे ऊपर फिर कौन मंदिर आया उनको बड़ी गाड़ी आएंगी ना
Where is it?
जी अब कल शनिवार से कल नहीं होना
Just a minute, please. Yeah, whiteboard. Now, some of the things which I wanted to write, I will put this and put it on the presentation. So when you will get it. The first thing that I have realized in international valuation is understanding of the situation. Now, what I realized was understanding of the situation between us as valuer and the client can be quite different. So this is something which we have realized and we should be careful. The second is language. Even if we are talking all in English, even if we are all talking in English, our language and the language of Japanese and the language of Norwegian is different. So that's another problem. The third problem is understanding of Indian law. So here, what my suggestion is that one should have a full set of, a soft copy of the laws kept somewhere in your files, so that you can always attach and give it to the customer or show it to the customer that we are doing this because of these reasons. Then normally many times these international people, especially from Russia and so on, will also offer you bribe to do what they want, because they think that every Indian will be able to mold whatever they want in that manner. Of course, as in the country, there are good people and there are not so good people, but that's fine. This is one. The second is details. Details and details. Now, this is extremely important. Please do not assume that the client knows everything or other people know everything. One has to explain and one has to go into extreme details. Now, when you go into extreme details, it takes a lot of time. There is no doubt about it. But then that is the only way when you can handle this. Another thing that we require is patience. So, it is very easy to say, but a patience is required when the international people, they will call you at, let's say, 7 o'clock in the night, or they will expect you to be on a conference call at midnight because in Europe, they are, they want to be there at that time. So most of the valuers I have met, they are flexible in this, but then, one still has to be very patient on this. Beyond this, what my rule have been, follow the law. That is one. Second is stay as per IVS, and the C part is assumptions, calculations, peer comparison to be carefully mentioned. So these are the things. These are the things which are there, which my experience is. Okay, any questions on this? And then I will take up the next part, which was mentioned, that what are our experience for valuation. We did 2 valuations of land and building, one in England and other in US. So we can also share some experience on that, though it is not on the slides.
Yes, that would be very good and nice. Here, once again, I will just request you to convey me that logic you are trying to convey, that when like sheds rate was 4 more from 800 to 3200. So like you said that use chronological or something you covered up. Just can you please convey that point again, that how did you then finally arrive?
No, we did not cover up. What we told the clients was that something between 800 to 820, 830, we can use a discretion, we can do some, but between 800 to 3200, we will not do that report. So what you should then do is, whatever we have given, then Ernst & Young should get a S&F valuer, or we can do that S&F valuation through our S&F valuer, and put this as a tech value called technology or goodwill. But as a physical asset, we will not give you such a high valuation.
What was then finally, approximately that, what was the final like result of that, your discussion and ENY
See,
getting into?
No, it was an ENY project. ENY was given the mandate for transferring, for the acquisition of company A by acquisition of company B, including valuation, including getting all the government clearances, everything in India.
Ji.
So the Japanese, there was one Japanese which came from Ernst & Young from Japan, who was representing company A. So when we explained the whole thing to him in detail, he flew down to our offices in Noida. He flew down to Noida. We had long discussions, and he was satisfied because he didn't call us later. And we explained why what is the level of discretion can be used, and we gave them evidences. That this is the way the CPWD construction cost and the CCI construction cost, which we will cover in the next, thing also, that this is where it is. So how can you increase the cost so high? Of course, we did not mention that everything has been over invoiced. We can't, even though we know about it. But then he also could understand, because after all, if he's working in Ernst Young, about 45 years of age, he's not a stupid man. So what we eventually told them was that on the asset side, please don't try to go beyond a certain value. Rest everything you put as a technology, goodwill, cost of replacement. Cost of replacement means suppose a new construction, everything has to be done today. Then how can then there's be a opportunity cost lost. Another major thing which we had a lot of, which I say that we were not able to explain, was that this was a 33-year lease land, and already about 8 years had gone. So we were considering the present lease rate for 33 minus 8 years as the remaining value. So, and he was saying, no, you cannot, you have to take the full value. So we had to again show them that how these things work. See, all of these things eventually boil down to how strong we are in our fundamentals, how much of research we are ready to do in our fundamentals. And in international valuation, these becomes extremely, extremely important. Let me share one case. We did this case. There was a company called Bharat Pump and Compressors Limited. Has anybody heard about it?
It's a BHL subsidiary.
Yes, sir. Yes, sir.
Okay, good.
Very much.
It is not a BHEL subsidiary. It was an independent company set up in 1970s. They are among the few people in the world which used to make compressors up to 1,100 bars. And their main client was all these refineries and powerhouses and so on. In 2021, somewhere in the month of April, May, the cabinet took a decision to close this. Now, the decision was taken at 12 o'clock, and by 4 o'clock, the management of BPCL was not aware. The CIF, they were told first, and by 4 o'clock, the CIF big battalions had moved in the company in Allahabad, Prayagraj, where this factory is, and everybody was forced to leave inside the factory premises. So when we went for inspection, we saw even lunch boxes thrown, so everybody was just forced to leave as it is. And there was an administrative office which was outside, and the factory was inside another gate, and they left. And then when they left, it was after that things realized that this factory is going under closures. When we came into there, the whole it was of course through a tender and everything. So when we went for doing inspection, we were greeted by, these union leaders shouting and so on. So it was a pretty, uncomfortable, and we were slightly afraid as well. And when we did, we saw it was very obvious to us that this factory, the employees had spoiled the factory. Now, let me tell you some very interesting things. The technology they had taken in 1978-79, in which they had not converted the foot-pound into kg millimeters even today. From that to now, not a single weight reduction program had been done or energy saving program has been done. The total inventory they had was for over 3 years. So it was obvious that a lot of things are being purchased. And inventory, when we started looking into inventory of items which were machined, grinded, ground, and kept, they had taken rust. The machines were excellent, not well kept, but fine. So when we did this total valuation, and they had a cylinder plant. And during COVID time, this was just around the COVID also, they had got approval from UP government to make oxygen cylinders, which again, their union problems and so on, which they could not do it. Now, very interesting, this company's, the chairman of this company and MD was from BHEL. He was typically a BHEL general manager who was running it, but it was not a subsidiary of BHEL. On the other board of directors were also Engineers India Limited, one board, technical board members and others. So when we gave this total report, because all of this happened, we were extremely careful. We said, now we know very well that this report will go under some sort of audit. And so, when we filed the tender, we were not aware, but when we did it. So we were very, very careful. And it took us more than 15 days just to, keep tallying and so on. They had given us 3 months. We took extension of 1 month, but we did it. After we did it, we had to give several presentations, the last one with the Secretary of Heavy Industry about the process of valuation and things on valuation and so on. So this whole thing became so, what you call, so detailed and so much of discussions and so on. And everything was telling us, sir, we have nothing against you, but we also have to save our skin. We have to make sure that, everything is above board and so on. And so, so like this. The best relief we got was, or you should say the thrill we got was, we had given a valuation of only plant and machinery of 42 crores. And the plant was auctioned by MMTC, Metal Scrap, MSTC, Metal Scrap Trading Corporation at 43.5 crores. So we had given 42 point sub crore and it was finally sold at 43.5 crores. So which was thrilling. The land was of UP government and which was given for free. So, there was no value we could attach to that. And all the buildings, we had also put a scrap value, suppose it is broken and then disposed of. So we did that type of work where again, we had to go through a lot of grilling, by authorities and at a secretary level and as a valuations, these are very tough assignments. These are thrilling assignments because you have to learn, you have to work a lot. But then, these are the things that we do. Of course, we also do small IBC cases of 5,000 rupees, valuing 5 air conditioners. So, the reason I'm giving this assignment of this is that one should be clear that any report that is being made will be checked. And one should assume it will be checked by all the auditors, all the court, and do we stand by that? So, and it is immaterial what you are valuing, because once your sign is there, you are responsible. You can't say I signed without checking. All of these things, they don't work. In another case, there was an asset where one public quoted company was selling to another public quoted company. Both of them shares quoted on National Stock Exchange, and they sold one full factory. So when we sold the factory, there were 2 merchant bankers, there were 2 more bankers, and in the end, the SEBI officials, we had to keep justifying our valuation, why this, why not this. And the most irritating justification was with the merchant bankers who felt that we had overvalued it. But the good is that we were able to stand by our ground and we were able to justify what we have done and why we have done. So again, it's the same thing, be careful, take time, just be sure. Anything that you are mentioning, you should have a backup. Whether you put the backup in the report or not is not important, but you need to have a backup why. And keep asking yourself, especially in these type of assignments, what if I am questioned by the court that why did you do it? What will be my reply? What is the backup? Okay, sir. Anything else on these?
Is it possible for you to share a typical report to be submitted?
Okay, let me do one thing. The typical report to be submitted. Typical report to be submitted. See, if you look into the law, I cannot show it the report, but let me see. Let me do one thing. For the index one, I will find out one report which then I will show it. Is that okay?
Yes, perfectly okay.
Okay, okay.
But the best way to do a report is just follow the IVS guidelines. That is the best part. If IVS guideline says you should have this, you have this. It should have this, you have this. So we are pretty, and the reports are not very complicated. They're very simple way of writing, but we have put it in a logical order as per what we feel is logical. So. We still have about 15 odd minutes. So anything else for today or on this? No, not 20 minutes. So Dr. Sethi, anything else would you like to know now?
Thank you very much. Only if you can share some 15 minutes, some experience of like going and doing valuation abroad. So like from Texas, he had conveyed very in a good manner that local rules, that is understood also, common sense also says that whenever we will go abroad, so local rules we will have to use, but still like compliance wise or something, if they have some other requirement, because they will not be recognizing directly IBBI, that is the Board of India, Insolvency and Bankruptcy Board of India. So like one is to go and then, or you or anybody else like from Texas, he had conveyed, somebody can share some experience that some local exams we have to do, or we will have to get ourselves registered in some their local engineers or valuers organization, or
Dr.
like
Sethi,
generally.
Dr. Sethi,
Yes.
my purely personal suggestion would be that, see, my son is in Canada. We keep visiting, and I have also tried to see how to register myself in Canada. There are different type of issues in these things. Sorry? Sorry, sir, can you please repeat?
Hello.
Hanji.
Sir, what does the EY representative stands for, EY?
Ernest and Young. Ernest and Young.
Okay, sir.
Ernest and Young is a very large.
I know that, but I forgot to.
No, it's okay, sir.
Okay.
Yeah. So, the one thing which I have seen, as soon as we go out of India, whether to Europe or to Japan or to US, one is the amount of expertise they have in valuation or anything else, and the amount of details they go into it.
Okay.
My son had purchased a house in Toronto, and to get a loan, he had to get the valuation report. That valuation report was 35 pages.
Hmm.
35 pages. Now,
Okay.
the person had taken out the original layout approval from the local municipal. He then did some visual checks. He also did some technical checks on the house. The house was mainly made out of wood, with up to the plinth area was RCC. Heating systems, roof. So the safety, because everything heating there is through gas. So there is a lot of detailing which goes into these type of things, which we as Indians feel, no, it is not required. We assume lot of things.
Correct.
So that is one major difference.
So then we must have charged also good fees.
He charged
Sir,
$1,200, which was the standard fees in Canada.
Okay.
Sir, in Texas, जो normal fees is, it starts from $400 and goes up to $1,200.
Okay.
So we are Canadian dollar is cheaper to US dollars by about
Yeah.
20%.
Ah.
So the fees is approximately similar. But the report
Sir,
which
Sir, report
they,
in
yeah.
valuation report is, sir, it's a very explanatory, not like India, sir, we make. Really, sir, such a big contents are given in the valuation report. I have started studying how they, and sir, in sales comparison method, they give at least 5 examples, 5 comparisons.
So another thing is that
ये भारद्वाज साहब बहुत अच्छा बता रहे हैं भारद्वाज साहब तो आपने मिस्टर भारद्वाज कुछ have you joined something some local body
No,
or
sir, I have just came here 25 days back, sir.
अच्छा तो आप टूरिस्ट वीजा पर हैं
Sir, my son is in the US, sir. I have come to him. I will stay with him for 3 months.
3 months तो मतलब फिर तो मतलब you are not on work visa.
No, I am not. Sir, I am just studying how valuation assignments are being carried out in Texas.
नहीं पर लोकल बॉडी में उनके तो कई रियल एस्टेट के लिए भी रूल्स होते हैं. You have to first.
सर उनका क्या है कि मतलब you have अगर आप if you come from another country, you have to complete 300 study hours in US. That is mandatory.
अच्छा.
And you must have 1,500 verifiable experience.
After coming to USA.
Sir, if you want to do valuation in US, so because in US, every state has its own rules. There is not any single rule.
Okay.
If you are in Texas or if you are in California or you are in different states, they have different rules. So I am talking of Texas. So there is one agency, Texas Appraisal Certifying Board.
Achha.
So you have to get yourself registered with that board. And there are also CEPs and the CPE points you have to submit every month. And after every 2 years, you have to renew your license. In India, 34 license is renewed after every 3 years. But here, after 2 years, you have to renew your license.
नहीं कौन सा इंडिया में 3 इयर्स के बाद क्या बताया आपने कौन सा इंडिया में 3 इयर्स
सर 34 AB जो आपको इम्पैनलमेंट यू गेट फ्रॉम मिनिस्ट्री ऑफ फ्रॉम इनकम टैक्स डिपार्टमेंट it has to be renewed after every 3 years. It is not lifetime at present. Those who have old 34 AB license, there is no time limit, but for 2-3 years back they are giving only for 3 years.
अच्छा नहीं मेरे को तो उन्होंने शायद लाइफ टाइम का ही दिया. Most probably I've seen it. I will see it once again. I think
you see last page.
हाँ लाइफ टाइम का होता है शायद.
अभी तो मिले हैं.
अब नहीं दे रहे हैं सर, at present they are not giving for life.
No, sir, he
Maybe
will
a
give
recent
lifetime.
change.
They are giving for 3 years only.
So I had one query.
Sir, it was other way around. Earlier they were giving not giving for lifetime. Now they are giving for lifetime. Earlier it has to be
हाँ
renewed every 3 years. Now they are giving
Sir,
for lifetime. It is
sir, I
other way
don't
around.
know. I
correct,
have
I think
renewed
so.
my
No, I am
license.
sure. I was having earlier this also registration. It has to be renewed every 3 years. But recently they gave me lifetime.
Very
Sir,
good
I
point.
have
Yeah, same
renewed
thing I was
just
trying to say.
I
I also
have
received
renewed just 2
license.
months back, sir.
चलिए ठीक है, कुछ कुछ कई बार कर देता होगा, ठीक है, अब क्या।
हाँ सर, वो ऐसे वो डिपेंड करता है, डिपेंड्स ऑन द
हाँ, लोकल
Because-
कमिश्नर बॉडी में भी कर देता होगा, समझ
because
रहा
I
है
am
उस पे।
registered with Ghaziabad Chief Commissioner, so they give only for 3 years.
अच्छा अच्छा, गाजियाबाद ने मुझे दिल्ली से किया, मेरे को तो दिल्ली वालों ने तो ठीक कर दिया।
नहीं, दिल्ली वाले, दिल्ली वाले, one of our friend Mr. Dureja is here. He is in the seminar. He is also renewing after 3 years. He is from Delhi.
अच्छा वो
Agarwal sir, if I may interrupt with a question.
Yes, yes, please, sir.
So what I wanted to know is, see, we are discussing about IBBI and 34AB where it is relevant. I mean, it's not part of your topic, but since we have discussed it, I go to court as a valuer, sir, and I do private valuations. I don't do much for the bank. I don't do anything for corporates. So basically, I am registered with IBBI only. So is that enough for me to do what I'm doing, or am I
Yes,
looking somewhere?
it is absolutely sufficient to do it. You don't have to do anything more.
So I don't have to be with 34AB.
No,
Though I
you
have
don't have
applied,
to.
but I have not yet received it.
No, it typically takes 2 years and the typical cost is 1 lakh.
No, that's okay, sir. But I mean, does that have to come to make me qualified for what I'm doing?
No.
I am already qualified.
No. 34, IBBI is more than sufficient.
But IBBI is for corporates, no, sir. The law itself
No.
is for corporates, no, sir.
No, sir. IBBI is a mandatory requirement of company law board, and anything related to, even RBI today has said, even SEBI has said that they say they only want 34AB.
नहीं, IBBI
Sorry, IBBI. I'm sorry.
IBBI
Yes. So the reason why, see, all my friends are now retired from government, the senior IAS officers and all. The understanding which they have is that 34AB was a short-term measure of income tax, and they are not sure whether they would like that to continue or the government will like to continue. Rather, instead of that, a rather strong regulator is going to come for valuations, and the valuation body will become as strong as any other compliant or professional body like chartered accountant and a company law, company secretary and so on. So this is what the view is. So it
Pending
is
in the
also
parliament.
Essentially, by
Pending in
having
the
IBBI,
parliament.
it will come. No, it has not come to the parliament so far. The bill has to come to parliament. In fact, my information, unofficial information is that it is only at the right political time it will come to the parliament.
so by having IBBI registration, it cannot be interpreted that I can do only company valuations.
No,
I can do any valuation.
you can do any valuation so long as it is in the stream on which you have got the certificate.
Right, sir.
So suppose you have the certificate for land and building.
Yeah.
Please do not value for anything else except land and building. The right way to do is you get another valuer, again IBBI certified, give him a work order, and in your report, take his report, attach it, give the summary on top in which both the things are there. That is fine.
Thank you, sir.
And another small, just a suggestion, in case you don't have a GST number, try to get a GST number. So it becomes something like a sole proprietary firm.
Why, sir? Why is it mandatory?
No. It is just not mandatory. It is absolutely not mandatory. But especially large corporates, if you have a GST, they have somehow, I feel, what I have seen, they have a comfort level.
Okay.
You see, it only tells that you are compliant not only in this, you are also with GST. So you are not so those mechanics which are selling scooters or something like that.
No. Excuse me. Let me interrupt in this. GST is something to do with turnover of more than 5 lakhs.
More than 20 lakhs, sir.
20 lakhs.
More
20
than
lakhs,
20
yes.
lakhs, sir.
So in valuations, it's very difficult to get more than 20 lakhs,
No, sir. Sir, again,
Anybody is doing valuations.
absolutely correct. It is very difficult to get more than 20 lakhs. However, you can still be registered in GST. After 20 lakh, it is mandatory. But before 20 lakh, it is voluntary.
But you have to maintain the compliances.
No, it is not too much. I do my own GST returns.
Properly.
It takes me half an hour max.
So in that case, you have to,
Sir, may I come in, please, sir?
Please,
It is
sir.
not necessary if your
It is
income
not
is
necessary.
below 20 lakhs, you don't have
Yes.
to pay any GST.
Now, if your income on your professional services, suppose your income includes capital gain and share market, then that is nothing to do with GST.
so once you take GST, you have to apply GST in every invoice, in all kind of services.
Sorry, in apply GST in?
All kind of services you give. All kind of services you provide.
I am unable to understand the question. See, to apply for GST, you only need to have a PAN number.
So what I have to say, suppose you have GST number, then you have to charge GST in all kind of assignments. It's
Yes.
not
Yes,
only in
yes.
valuation.
Yes,
Yes,
of
in
course.
any case, you have to charge, and that GST you have to pay also to the government.
Yeah.
Yeah, but the second advantage is a lot of your inputs, you can offset the GST.
Small clients, they will not be able to give. Maybe they will be reluctant to give GST. The charges will be higher there.
No, this, I don't know, sir. A small client means how small? The smallest work which I have done in my practice for last about 4 years is 1,500 rupees. And I have very clearly told you'll have to pay GST. And the highest billing we have done is few lakh rupees, which also is with GST.
Very motivating.
So again, it's a matter, sir. I don't know. This is again a very personal feeling. Of course, it is absolutely not important to register with GST. But with the corporate client, typically they ask, are you registered with GST?
Sir, is it very difficult to get GST number?
No.
It's not.
No.
You can get on the same day you get GST.
Very easy.
Maximum 7 days.
I have also
Pan
GST
card?
number. I got on the same day. I applied, and immediately after lunch, I got the GST.
I don't know why in Noida they are not giving me something. My CA was telling that they are saying that you are not filing at right address or something. For last 4 or 5 days, he is struggling.
But then, sir, I have a request. I'll tell you with my experiences, a little of my personal sharing experience. So I was in the corporate sector at a very, very senior level at a CEO, blah, blah, blah. And in 2014, I decided, yeah, enough. And now I want to go and relax. And after about 4, 5, 6 months, I got sick of myself. So I said, no, I have to come and do something. So I started something that we call as a business consulting, advising people. So I was able to move and so on and so forth. Now, hardcore engineer, MBA, CEO, I never did accounts in my life. So I outsourced the account to a third party and took the service tax number, blah, blah, TAN, PAN, whatever it is. So the first thing when I asked the concerned gentleman that you have to file the service tax return, they say, you come to my office and we'll do it together. So I went 3 days to his office and I realized, ki, Baba, if I'm going to sit there and get my accounts made from him, then what use it is? So I was zero. Then what I said, okay, let me try something. So I went into a very nice website called YouTube. And in YouTube, please believe me, I learned everything, how to do accounts, what are accounts, how to do service tax and so on. And then I stopped paying everything to that party. And since then, I'm doing all my taxes, including TDS return. Income tax is the only thing which I hire a good lawyer, chartered accountant. And I pay him well, and he does all my tax. But before he does my tax, he ensures all my GST, everything is in order. And if not, then he makes sure everything is in order, and then the tax is paid. So like today is 2nd of October, by about 12th of October, all my September invoice and input and everything, it will just take me anything between 1 to 2 hours and my return will be filed, just sitting on my home office. But I have realized that with GST, and that's what my auditors and others, strong chartered accountant has said, that if you have GST, the level of compliance increases by one level higher as far as the government of India is concerned. And today, everything is tracked. Your credit card is tracked, everything is tracked. So having a GST one level higher compliance is a comfort feeling to the regulatory authorities and to the companies which are your clients. That is all. It is not mandatory, sir. It is not very difficult. In my opinion, filing GST return is simpler than doing valuations.
Let's save
Sorry, sir?
Let's save the
Agarwal sir, may I come in, please?
Yeah, please, sir.
Sir, I would request to you and the host that the discussion should be on the topic which you have discussed. All the topics regarding the registration with GST and registration with CBDT or the IBBI, all these things are important. I'm not saying that, but there can be a separate session for that. I think
Agreed, sir.
our discussion and question answer should be on the topic which you have shared on the board, and I think you will appreciate it, and the entire team will consider it sincerely. In the discussion in between your lecture, I have raised my hand 2-3 times, but I couldn't speak, and now things are gone out of my mind. Sir, this is the request. Please, you have a very good session on the different reports, sir. Thank you very much.
Right, sir. Chalo, anything else before we close out and we meet at 2:30? Because next session is going to be a slightly more difficult session. It is on indexes. That's also going to be a little more statistics and mathematical oriented. Okay, if there is no session, then let us close this and we meet at 2:30.
Okay, sir. Thank you.
Okay, sir.
Okay.
Thank you, sir.
So we will again meet at
Thank
2:30.
you.
Yeah.
Okay. Thank you, sir. Thank you.
Thank
Thank
you.
you.
Thank you.